All right, we're live. This is GPPJPY. Let me share the live. You're welcome. You're welcome. I want to share the live so that more people can join. Let me share it to the community. Um, all right. All right. I'm currently on GBP Let me share to the community. Still hold down small. All right. So this is GJ daily time frame. I'm currently on GJ daily time frame. If you notice, GJ is currently giving us an uptrend move. The full trend of the market is bullish. So now, when looking at the structures of the market, you notice that this is the zone that got broken. This is the zone that got broken. And what created this move is actually this low. So you're expecting your buying opportunity around this particular zone once price come to this zone because GJ, I'm still expecting more selling opportunity on GJ. I'm still expecting more selling opportunity on GJ, and this is the highest level that price goes to on your daily time frame. So daily time frame is now giving us that previously price was at this particular highs, and now the low that actually caused this impulsive move is this particular low, which price need to come back, test it, and then this is when you'll be looking for a buying opportunity that will take you up to this particular highs. You see it on GJ. If you drop down to the 4 hours time frame, this is my 4 hours time frame. If you notice on my 4 hours time frame, this is the lowest level that caused an impulsive move. So this I call it my trend low. So price came out to the trend low because this is the lowest level that caused an impulsive move. So I don't call all these small ones the trend lows. This low that actually caused an impulsive move to break a recent high is called a trend low. So whenever price comes to this particular low, there's always a reaction. Price always pull back all the way back to this particular highs. So if you are looking for a high buying opportunity, you are buying at this particular low that will take you all the way to this particular zone. Now, GJ is still dropping. So you look for more selling opportunity on GJ than more buying opportunity. But this is a high GJ created. GJ created two highs here because this is the highest level that caused an impulsive move to take out these lows. That's why GJ came here and was reacting at this particular zone. If you notice, this zone was reacting. DJ was actually reacting at this particular low, put down. This is when most of us look for selling opportunity that dropped price because I noticed that this low was taken down. So once price come to this particular zones, there's always a drop. So which price dropped down. So still expecting more drop because this low haven't been tested twice. So if the buyers are buying, they have to sell all the way to this particular zones before they'll be buying. So once this low is being broken, we're having the buying opportunity that we are looking for at this zone. So for me, I'll be looking more on selling opportunity than that of the buying because my 4 hours time frame is this telling me that price is an uptrend, but before the buyers can continuously buy, price need to come back to a key level and retest on it because you see here is a gap that haven't been filled yet, which price need to come back to fill it, and then before the buyers will keep buying. Which if price fill it, it need to drop down to this zone, then before it will push out. If you look down to your 1 hour time frame on the GJ, you notice 1 hour time frame, this is the lowest level that caused an impulsive move to break a key high. So that's why price dropped massively. And taking it out, that's why price was able to come back here before rejecting. So price rejected all the way to this particular key low, and that's why price is making a pullback here. So price is making a pullback. I'm still having my key low here. This is my lowest level. I call it a trend low that price need to come back to then before any pullback more will occur because here haven't been tested twice. So you have to be very patient on GJ. Unless price turn out taking these highs, you notice that price need to come back here, test it again, and then before the sellers will start reacting. So you need to be very patient on GJ. This is 1 hour time frame. You can drop down to your 30 minutes time frame, your 15 minutes time frame, and look for entry. So this 30 minutes time frame, you can see price giving us a selling opportunity. For those of us using trend line, I know you must have drawn this to this particular zones, connecting more selling opportunity. But this, I don't use a trend line here. My key zones are my highs, which I marked out here. For this is 30 minutes time frame, I can mark out this as a high that price need to come back. And then if price is actually targeting this low, you need to come back, retrace, and then continuously going down. But this is a case on price. If you notice, before price will start going, you need to give us a change of character, giving us a reversal, which I always get go in with. If you notice, price was selling, and before price change, it gave us a reversal. Take out this key high. This is when you know that price is actually going up. This is now changing to an uptrend. This is the zone. Actually, take it out. So when it broke it out, what happened? It make a retracement for the second time that smashed out, giving you a new continuation to the upside. So this is now my key high. This is now my key zone, and this is my key zones, and these as well my key zones. You can see it's the highest point price cost, the highest point price cost. So those are my key zones. You can drop lower here, starting in time frame. Then I have more, which is this is AUD USD, AUD USD. I'll be going down to the daily time frame to look at what the daily time frame is giving us. So here the daily time frame is giving us a bullish opportunity. Notice price cost uh, a bullish opportunity from here, taking out these particular highs. This is the high price took out. This is the high price took out, telling us that the buyers are in the market. Price took out these highs, and then what's happening? Price went all the way to these particular zones, which haven't been tested, Price went all the way to this zone, which haven't been tested, which need to be tested if price is continuously going up. If it's rejecting down work to this particular zones, price needs to come back here, test it. And before it will test it, that is why you see price ranging here. It's haven't come back to here yet because it haven't meet where it's supposed to meet before price will start going up. Because this is a low that caused an impulsive move to take out this key high. That's why you see price ranging. It haven't getting back to these highs. It's still coming back here. So when price up here, that's when you see an impulsive move pushing up back to this particular height. So I've marked it out on my daily time frame, my key zones. So then I'll drop down to my 4 hours time frame. Let me refresh. Daily time frame. Okay, 4 hours time frame. Seems there is very high. Let me mark out this as well as a key zone because this caused an impulsive move to take out this low here. So I will be dropping down to my daily time frame. Sorry, 4 hours time frame. My 4 hours time frame is giving me this high, which is the highest level here. That price created that caused an impulsive move to take out this low, telling us that price is continuously heading to the downside. That's why when price take out a low, what happens? Price will always make a retracement into this zone that always causes impulsive move. That's why if immediately price break it, what happens? Retrace back to create an equal high. It haven't even met yet. It came back immediately. It came back to this particular zone. So what happened? Price started giving us a rejections because this is the high that caused an impulsive move, taking out a low. This you don't just call it a low, you call it a trend low because this is the lowest level that caused this move. You see, you won't call this a low, you won't call this a high. Sorry, you won't call this a high, you won't call this a high. The main highs are these. This is a swing high, trend high. The main lows are these. This is a main low, trend low. Price always come back to that particular zones. So you notice when price was going, it's always swinging, giving us a swing to the upside. The main place you are paying attention is the highs that price created. Immediately AUD go back to this particular highs. What happened? It dropped. Why didn't it drop around this particular highs? Why didn't it drop around this particular highs? You see it, that is your main key zones where you're always looking for what? A buying opportunity. Where you're looking for, if you, the low is where you're looking for a buying opportunity, and the highs is where you're looking for a selling opportunity. So whenever price eventually goes up, boom, taking out this, your next target is this. This is your next key zone. Not all these small ones that are here. This might cause a little retracement. You might think that price is selling, but it's not. The main key zones that will cause a reaction where the sellers are always in the market selling are here. You see it? That's why price is coming down. What price will do again before it will retrace back to these particular zones? It needs to come back again. It needs to come back again because this is the high that caused a shift, and this is now the low. Before price went up, before price went up, price cost something like an equal low here, which if you use a rectangle, this when you understand it more. You mark out from the body to the wick, you notice price tapped on it, and this is his price started moving up. And this is his price move all the way to this particular zone. That's why price is coming to come back to retest on it. Because why? This is a gap. I always say if price give a gap, price always come back to fill up a gap before it was continuously going to direction. Let's say price was bearish, and before it start giving a bearish move, it left a bullish gap. It needs to go bullish to fill up the gap before price will start going bearish again. Which price immediately tapped at this close to these key zones, it started dropping to come back to fill up this gap that it did here. So filling up this gap, it needs to come back all the way to this particular low that causes a positive move, or drop back to this zone that caused this break. So if you drop down to your 4 hours time frame, you notice this low. Okay, let me mark out this as this is the zone that always this one is the one that break out here. We're having our gap here, small gap at this particular kilo here. We're having small gap here, which we're having our key zones here at the top, here at the zone. So we're not doing anything if price is not here. This is your 1 hour time frame. You return back. So this is your gap haven't been filled yet. What you have to do is to follow the trend. Since price came back here, started dropping. You notice this is the zone that caused an impulsive move to break this high, and this is the low that caused an impulsive move to break this high. This is this is it. You marked out this lowest level here. That's why price was able to break it. You mark out this lowest level. That's why price was able to break it. That's why at times I use this thing mark from the body to the wick. When price broke it, that's why price was able to retrace on it and then drop down. Then you follow the move again. This is the low that caused, this is the low that was broken. And what break this low is this high. So this is your main target again. You notice price drop back again, creating this low. You notice price creating this low, finding it difficult to break this low. What you have to do is to pay attention. If price eventually turns from here, breaking out these highs, this is where price is coming to straight ahead. Then here, that is where you now be looking, preparing for your dropping because now price break a recent low. Price came back here, finding it so difficult to break this low, and price eventually take out this key zone because this is the high now. Price created while moving down. So price need to come back here. If price is coming back, I'm seeing something like see price making something like W from here. If price eventually take this out, this is your 1 hour time frame. If you go down to your lower time frame, you see that this will be a very long trade too. If you pay attention to it, even from the 15 minutes time frame, this price is finding it so difficult here on your 1 hour time frame. Sorry, on your 30 minutes time frame. And this is your key high. Why did I mark this high? Because this is the high now. This is the low price made that pushed up to create a key high. Then now price is pushing down to this low. That's why it's finding it so difficult. That's why I always tell you a key zone are the low that caused a break. And if you notice here, this why price is reacting at this high is because price reacted at this particular zone. So anytime price did what? Take out like this, continuation. Once it push down, take out this low. Your next key zone is here. You now draw this one like this. This is where you are looking for a continuation of the sellers. Because now this is now the recent one that take out this low. Then this is now your POI for continuation of the sellers. Then if you are looking for a buying opportunity and you see reversal of the buying opportunity, you reverse, your TP should be close to this particular zone. Because here the sellers are here ready to sell. The sellers are this high ready to sell. The sellers are this high ready to sell. The buyers are the low ready to buy. That is why whenever price comes, it goes impulsively, it just broke it out, telling you that this is a continuation of the sellers. That's why price was able to retest continuation, but couldn't break this now, finding it so difficult. So your key zones are these, and I think I marked another ones here. Okay, this is a low. Okay, this is the key zone I marked here on the higher time frame. On the higher time frame. So that will now be giving you continuation of the sellers. So you'll be trending with the market. This AUD USD. Then we'll go down to USD CHF. Let's go down to the daily time frame on USD CHF. Let me refresh the chart. You notice USD CHF daily time frame is giving us what? Main looking at the market trend, bearish. It's giving us a bearish market. What created this bearish? Man, looking at it, you notice this is the low now that price created, and this is the high. When price created this low, it created this high, which haven't been tested. So I still having this high as a key point. Then when price dropped from this high, it dropped and then created this low. What happened here? Price finding it so difficult to break out of this low. This is when price is trying to make a reverse. So now leaving this on the daily time frame, I have this as my key zone marked out on my daily time frame, because if we drop down to the lower time frame, it's a very massive space. And I have this as well on the uh, daily time frame being marked out. I know say price is not going to reach this side finish throughout this week, but if you follow it, we're still going to analyze for the next week if price anywhere price reach. And we'll go down to the 4 hours time frame. This is my 4 hours time frame. You notice price drop down. This is the highest level, and then you notice this is the lowest level price drop down to on the daily time frame. And this is the high. You notice price was swinging. This is the low that causes this swing to take out a key high. That is why price was able to drop down close to this low. And this is an impulsive move. Price started swinging, breaking out the highs. Price started swinging, breaking out these highs. So now, when price break out these highs, your key point is this. This is a low that caused this impulsive move to break out these highs. And now we're having out these highs because price haven't tested these particular zones. Price haven't tested these zones. So I still have price coming back to these particular zones to test it. If you look at this from your 4 hours time frame, okay, this is your 4 hours time frame, and this is the one I marked on the daily time frame. You can see it. We're having nice swing here. I didn't mark all these. This is the zone that caused an impulsive move, taking out a kilo. Notice it took out this low, it took out this low. That is why this is a very active zone. We marked it from the daily time frame. I noticed price drop out, taking out this now on your 4 hours time frame. That is why I marked out this, I tape it out. Then price created these highs. Why this price was able to drop at these highs is because why price gave us this, and then price gave us this highest level that caused this drop to this particular low. When price returned to this low, it couldn't drop back to this particular zones, and it started here by reversing back. It reversed back, get back to this particular zones that caused this impulsive move. This is when price continuously heading back. But expecting price more buying opportunity all the way to this particular highs, expecting my buying opportunity or the hold to this particular highs. Then, if you are looking for a little dropping of a little selling opportunity, that will be at these highs on your 4 hours time frame. And then, following up the trend, you notice this is the zone that was breaking, that was broken. If you go down to the 4 hours time frame, 1 hour time frame, we're having this low as the low that caused an impulsive move to break out a key high, and then it dropped back. It caused it dropped back close to this zone to make a retrace at this low, and then pushed up to break these highs. Having here your 4 hours time frame, sorry, your 1 hour time frame as a key low, then it break out of these high continuations. It created a low. It break out of these highs continuations. If you want to go down to your lower time frame, all you have to do is to mark out this now. This is now your current swing low that break out of this current swing high. So anytime price make a push and break it, is heading down to this low. If you make a push, break this low straight down to this particular zones, that is if you are entering from the lower time frame, your 30 minutes time frame, your 15 minutes time frame. You see it, your 15 minutes time frame is a nice trade here. See, a very nice swing trade here. If you break this, a very nice swing to this particular low. If you even break this, a very nice swing down to this particular low. You can see it on your 15-minute time frame. If you drop down to your 30 minutes time frame, you notice this is now the highest level that price gave you. This is now the highest level that price gave you, which is making the rejections there. See price trying to make a rejections, creating and try to create an equal high there on your CHF. If you go down to the 4 hours time frame, this 15 minutes time frame, you can see what the price is doing. Good evening. How are you doing? If you see what the price is doing, price went all the way to this particular highs, and this is an engulfing candlestick. Boom. taking out this low, telling us that price might drop all the way to this particular zone, or might find itself returning back to this low that caused an impulsive move on your 15 minutes time frame, taking out this your recent high. So this is a low that break this recent highs, and this is a low that break this recent highs. So that's why, as you're seeing this move now, it's dropping to this low. And when this low is taken, it's dropping down to this particular low, straight down. So, and this is your 15 minutes time frame, CHF. If you go down to USD this is USD Let's go down to the daily time frame. Let's refresh the chart. Daily time frame. Refresh. Okay, let's zoom up and see. Okay, this is the zooming, and we're having this as the low. If you zoom up, that's why price was able to come back, almost test it. That's why I like marking from the body to the wick, so that once price come to the body, I initiate my trade and stop loss around below the wick, so that if price come down to this particular low, it won't be able to take me out. This daily time frame, having this as your low, and we're having this as my high. You all know why I mark this high, because this is the high that caused this move to come back to this particular low. So there's a key high, and this, let me put it where. So this is it, and we're having this price came back to this particular zone's return, giving us a high. This is the high that price created that made these returns, taking out this low. So taking out this low, giving this as a good high on your daily time frame. That's why it got rejected at first year, and then later got smashed by this particular move on your daily time frame. Having this listed, we're having gap here, see gap here. So we're having this as a kilo. And go down to the 4 hours time frame. If you go down, drop down to the 4 hours time frame, you notice this now is the low that finish up these highs. So it finished off these highs, broke it. That's why price was able to return back to this particular highs, because it's an active high. So a key high is an active high. If you notice, when price always return to it, it causes an impulsive move as well. When price break it, let's say if to say price make a break, boom, break it out straight down to this particular low, like exact thing that is happening here. I think I see exact move here on, is it JPY? Okay, exactly thing here on JPY. Why is price rejecting this low? Can someone tell me why is price rejecting this low? It's because this low is low, is your trend high that got broken by this low. That's why price came back here, and you are seeing rejections. Price came back to this particular highs again, and you are seeing rejections, pulling price back. So eventually price give you a nice break, breaking out these rejections here. This is heading back straight down to this particular low. Then this is where you are now looking for a massive buy. Then when this low is being broken straight down to the next low, which is this particular low, not all these small ones, this one, there's the zone straight down that price is going. See it, you don't have much thing to mark, only your highs, your key zones. Those are the key zones. That's why price went broken, it retrace, bounce it, come back, try to make a fake out, bounce it again, come back, bounce it again. This is always reacting. So let's go back to JPY. Okay, that thing here on JPY. If you notice, this is your current highs. So this is your current highs. That's why it was respected, and then boom, it got broken. And this is the low that actually broke it. This is the low that actually broke it, and this is the high. So what you have to do, that is why price will have to make a return back to this particular zones to test it. So if you reject here, we're having these highs on your 4 hours time frame, making us an equal high. Let me refresh the chart so that we can see it. So we're having this low as a low that caused an impulsive move, taking out these highs, telling us that price is trying to make an impulsive, it's trying to go up. This is a continuation of an uptrend, continuation of an uptrend. So what you have to do, let me make this straight. So the 4 hours time frame is giving me the highs. The 4 hours time frame is giving me this as my low. and we're having gap from this particular zones to this particular zones, having a key zones here. So if price eventually drop, boom, reject here, there will be always be a rejections here at this particular low that price is making. Once this zone is being broken, because this Atlas is key zones, price is always making rejections whenever it tapped here. So once this zone is being broken, boom, we're having our main points at this particular zone. So you have to be selling down to this particular zone or looking for a buying opportunity at this particular zone. If you drop down to your 1 hour time frame to look at what the price is doing, this is a 1 hour time frame. We're having out a key highs, we're having out a key low, we're having out a key low here. This is the lowest level that caused this move to take out these highs. So we're having this impulsive move. We're having rejections made here. We're having here at your low 1 hour time frame. So we're having this particular zone. So if price is rejected here, take out this low. We're having price pulling into these particular zones, almost selling down to this low. But look for first rejections must be made here. This is a buy seller zone. I always say whenever I see this kind of formation, but this is a seller zones at this particular zone, and you notice price retrace here, making a poor high about around this particular zone. So if price smash out this low, we're having price selling all the way to this particular zones. This might be a rejection of price. This might be a rejection to price because here is where price make what a three line strike taken out. So straight down, first TP around this zone. So then you now be waiting for your buying opportunity. If you are selling first TP around this zone, so you now be looking for your buying opportunity. So if price return back to this particular zones, wait for your buying opportunity and return back to the upside because this is not a break. So if price eventually, while waiting for a selling opportunity and you didn't see that, what you have to do, if you see a break, you have to continuously doing what? Following the downtrend of price because this is now a structural shift, a shift in price. If price take out your trend low, it's a shift in price. If price take out your trend high, it's a shift in price, telling you that price is actually going back. So that is why price was able to come back to this high seat, making rejections. So if price eventually turns like this is a shift in price, continuations. So we're having this now as our active low. So price will have to come back here and continuously heading back up again. And we're having this is 1 hour time frame. Our USD JPY. So this is your 30 minutes time frame. Can drop down. This is a 30 minutes time frame, and this is a kilo. There's that price trying to make rejections here. When broken, boom, straight down because nothing to disturb it here. No opposite candle here to disturb it apart from these moves here. So that will make it to try to make a rejection a bit and then continuously go in these directions. So this is for GBP, JPY, and we're dropping down to gold. Let's look at what gold is saying. Let's go down to the daily time frame on gold. If you see gold on daily time frame, it's currently giving us a bullish move. This continuation, bullish, 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 bullish. Then what's this is the highest level here that gold made, and then gold was just moving bullishly and gave us this low as low that caused that impulsive move to be going that bullishly and still expecting more. And price came back to this particular low, and this is when price started giving us a selling opportunity. So my key zones are here, and we're having here because this is the low that caused this move. This is where the sellers gave us a little pullback before the buyers continuously buying. That's why price came back here and make small rejections. So I'm having that key zones on my daily time frame. I'm having here as well on my daily time frame. This let me draw it way. So on the daily time frame, I'm having that. Then let me mark out this low because the price try to make a rejections here. First rejections when breaking, there's a continuation. Then your 4 hours time frame, you see this. There's a low. There's why there's a low that caused an impossible move to break out. There's why price make a rejections here. It's went down straight down to this particular low. There's it. If it breaks a low, it's always going down. So I was actually looking for a buying opportunity around this particular zone. I think my last week analysis was here. Yeah, that price was coming to this particular low. Then which price came back. So it broke with an impulsive move around this particular zones. It broke with an impulsive move, giving us this new recent low as our new low on gold, and then before price will come back, it have to come back to these highs or probably these highs, and then before returning continuations. And if we eventually see gold breaking out, taking out this, then there is continuation squad because I'm still having price dropping down to this low. But before it will drop down to this low, it needs to do this. Since it have taken this out, it needs to do this, boom, something all the way to this particular highs. And then before doing a return back, before price can be able to set down all the way to that particular low where I'm expecting it. I'm expecting price to come back to that highs, then before price will continuously selling down. If price is eventually dropping if price is eventually dropping all the way to this low, it needs to go back to that highs and make it an equal highs. It needs to come back to this particular highs and make it an equal highs before price will start doing what? Dropping down, straight down to that particular low. So this is our this is it on the 4 hours time frame, and we're having this. So gold is still having more bullish opportunity, and we're having these highs which got broken. So this highest got broken. I'm now having this as my new high. Once price eventually take out this straight down to this particular zones that were marked from our 4 hours time frame, and this is the low that caused this impulsive move. That's why price came back to this particular high, is trying to make a pullback. So you still be watching it because this is your low, this is your key zones, and this is your key zones. Good, haven't come back to this particular highs. So it's still trying to pull up, still trying to pull up, and still expecting it because this is zone that caused this move. So it's still expecting it to return more. But having good more bullish to this zone, this is a load, a zone that caused an impulsive move. If you notice, it gave us an equal low that caused this break here, and price couldn't retest all the way to this particular zones. It just gave us a little retracement and start selling, return back and smashed out. This is why I marked out this is a key zone that caused an impossible move to smash out this. This will first have a little rejections to price, and then before this you have a major rejections to price. So little rejections, major rejections. So why selling here? Don't sell massively. Selling here, sell massively. And this is good. If you go down to your 30 minutes time frame, yes, you can see 30 minutes time frame. We're having at our key high here, and we're having at our key low here on gold. You have to be very patient. And we're having this as the recent highs that caused this impulsive move. So whenever this is being taken out, we are expecting price having bullish opportunity to this low, to this particular height. So when price return back to this low and take it out, then you notice price continuously going down. So this is our point of interest. This is our point of interest. This is our point of interest. So we're having our point of interest on gold. We're having this 30 minutes time frame. And we can go down to the daily time frame. This is US 30, our daily time frame on US 30. And we're having US 30 giving us these highs as the highest level price created, and give us this as the low level price created. So this is an impulsive move, giving us a continuation of an uptrend. And then while giving us that uptrend, it gave us this low that took out these highs. This is a break of structures, telling us that price is going back to the upside. And we'll return down to the daily time frame. This is our daily time frame. Our daily time frame, we're having price trying to make rejections here. And this is the lowest level that caused this impulsive move to take out these highs, giving us this as our new trend high. This is our new trend high. Our price is trying to respect, and this is our trend low. This is a trend high that got broken. So that's why price is trying to make a rejection. You can see it coming slowly, slowly down to this particular low, and boom, to go back. And this is a low that caused an impulsive move. Anywhere, any low you see that shoot up, any zone you see that shoot up, is called a trend low. It's an active low. Price come there, price always shoots. If price comes to a trend low, that's where you're looking for a buying opportunity. If price comes to your trend high, that's where you're looking for a selling opportunity. So you see the way price came to this trend high at the first, it sold. So this is your 4 hours time frame. If you return down to the lower time frame on this selling, you see that that will be a very nice trade as well. If this will be a very nice trade as well. If you go down to your 30 minutes time frame or 15 minutes time frame, you can see that. Is it here? Okay, let me go down to 1 hour. Is it then 30 minutes time frame, and then you see it. You see the selling immediately price tapped at that particular zone. Okay, this is a recent one. Let me go back. Okay, so around this part, okay, see it here. Immediately price out here. See the massive selling on your 15 minutes time frame. So you can drop down to your lower time frame and take an entry. You can even, it's even giving you a TP target here that you should take entry from here down to this particular low that caused this impulsive move all the way to this particular high, all the way to this particular high, breaking out these highs. So this should be your TP target. That is why when price came to this particular low, that is why price have to return back to this particular zone. It smashed it out. You see it smashed it out before it started changing dimensions. So you would have taken out your TP before started changing dimensions. That's why you need to take TP at structure giving. Don't take TP at your own giving. Take it as structure giving. If you say price is going to break out this now, that is not structure giving. That is your own because price haven't really gotten that broken. And you are putting your TP at this particular low that causes impulsive move to give you this low. Price wouldn't have gotten there because it came back to this particular zone before going back up because this is a low that caused this impossible move taking out this highs, giving you here as your key zones, giving you this low as your key zones. So that's why if at every trend low, looking for a buying opportunity, at every trend high, look for a selling opportunity. So let's return down to 1 hour time frame. This is our 1 hour time frame. Okay, refresh. And this is our trend highs. Now, 1 hour time frame, we're having this now as our low. Having this now as our low on our 1 hour time frame, we are starting. So this is a key low here that 1 hour time frame is giving us. Price is trying to make rejections after tapping here twice. So price is selling. If we pull down, we're having here as your first rejections. See price try to make a rejections here. And this is your first trend. This is your first trend low that caused an impossible move to take out these highs. So this is where price will come back to and pulls up. So US 30 on our time frame. We're having BTC as well. This is BTC. Let me refresh the chart. Let's go down to the daily time frame. Let's see what happens to our daily time frame. On the daily time frame on BTC, you notice price took out this. This is a high price came back to. And what happened? Price started making a retracement. It sold down straight down all the way to this particular low that price created. Boom. You notice this low, this is the low that caused this impulsive move, and this is the high that caused this impulsive move to break this low. That's why price came back here. It returned straight down to this particular low. TP smashed. You see, price came back to this particular zone. See, buyers are here trying to push the price. Price came here, the buyers bought all the way to this particular highs again that caused this impulsive move, and the sellers return it. It came back here again. The buyers are trying to return price. So that is why we're having here 4 hours time frame. That is why I marked that one was USDJPY. I marked this on daily time frame because I know that if price break any recent low like this, it's always put down back to this particular highs. And then that's why I say here is your minor rejections, and here is always your major rejections. This is your daily time frame. You're having it down on your 4 hours time frame. If you have it on 4 hours time frame, you see that this is a key zone. I think I have this analysis. Then this is a low, a high that price created. That is why BTC sold, and this is a low now price created, which haven't been touched. So still expecting price to drop back to this zone. expecting more drop on BTC back to this low than before. So because price has given me here, it's an equal high. This is a zone that actually take out these low structures, giving me that price is selling. And this is the lowest level that price created after giving me this. And anytime price touch my trend highs, and if you notice it touches twice, and this is when price return. And I think BTC is still returning back to this particular low. And this is a key zone that actually caused this move. This is a key zone that actually drop price to taking out this. That's why I'm still having this as my key zone on the forward time frame. If you drop down to a 1 hour time frame, you understand. You say I should come again with BTC. Okay, let's go again on BTC. Let me delete the analysis. I pay attention. No? BTC removed, and this is daily time frame on BTC. Uh, refresh. Okay, now we're having this as the highest level that price gave us. This is our trend high. That's why price was able to come back to our trend high, and there's a massive rejections downward. And this is our trend low. Because why is this called the trend low? This is the lowest level that price created. Why moving? See it. Price created these highs, pushed down, taking out this low, creating this as our recent low. Then price pushed up, giving us these highs, pushed up to the way to this particular highs, and this is it. Price dropped down to this particular zones, and we're having these as our recent low on the daily time frame, and we're having price tested here twice as our equal high. Price tested here twice as my equal high. Return back to this particular low, trying to make a rejections. So what I did, I went down to my 4 hours time frame. I have this zone as my equal high. I have this low as the lowest level that price created on BTC. You can see price trying to make a rejections. And I have these highs as the highest level here. This is a small high. So I call this a minor high on your 4 hours time frame, but this is a major high. Then I call this a minor high because why did I call it a minor high? This is a high that price created that caused an impulsive move to take out this. That's why price was able to return back. It went down to this straight to this particular zone and trying to make a pullback. So BTC, I have here on BTC key zone rejected, pull up. We're having it straight down to this particular low, to this particular highs. So we're having these as our what key zone on the 4 hours time frame. Price created this low, which haven't been tested, which I think this low need to be tested if eventually price is pushing up. And we're having this as our 1 hour time frame. And our 1 hour time frame, we're having here as our key zone. This is a zone. 1 hour time frame showed it more. Take out this. So having here as our new recent low. And price started changing structures here. Break out this, trying to make a rejections. And price, this is a new high that have not been tested, which price need to come back. If you notice, price haven't hit it. It just come here rejected, come here, it never hit them. So that's why the buyers are still buying straight down to this particular highs. So if they buy all the way to this particular highs, and this is why where you might be looking for your returns or this zone, a price broke or this particular zones on your 4 hours time frame. Notice this is a zone that price broke, this is low that price broke, which price need to come back. Having this as our key zones on BTC. This is a zone that caused an impulsive move to break this recent low. That's why I mark price here. That price it will make a rejections here. And this is the lowest level that tapped in here, creating an equal highs on your 4 hours time frame that got smashed out by this move. So creating this as our new high, which sold massively, breaking out this low. So why it broke out the low, this is now a key high. So eventually price push without giving you any confirmations here. You just push up straight down. You're expecting it at this particular high. You're expecting it at this particular highs. then this is where you'll be looking for your drop in. And we're having, if you drop down to your 1 hour time frame, your 30 minutes time frame, a 30 minutes time frame, if you see this price, this is the zone that actually caused this impulsive move to take out this pushing price, to take out this pushing price all the way to this particular highs that dropped price. So price pushed all the way to that highs. That is why price was able to come back to this particular low and make a rejections, because this is the lowest level that caused this impulsive move taking out this highs. So that's why price is able to come back here, tap on it, and try to make a rejections. And we're having price pushing. I'm seeing this as an echo, but we are having price trying to push again. So we're having our key highs, we're having our key low. So no zone have been broken. All you have to do is to be patiently waiting for price. So if price get to this zone, this is where you'll be looking for your selling opportunity. So for price to give you a return. But if eventually price, because this I can see this as something like, if price eventually break out, then this should be an equal low. Then we're having price coming back to this particular zone. You can see it massively on your 30 minutes time frame. This zone where it caused an equal low that got broken, so it broke retest at the particular zones and caused an impulsive move, taking out this low and having at this particular highs. Then market way having at this particular highs on your 15 minutes time frame. So you can use this and mark this, join into this. On your 15 minutes time frame, let me refresh it. On 15 minutes time frame. So around this particular zones, this is it. If price eventually turns break out this low, we're having price selling down. We're having BTC dropping down. If this low is being broken, we're having BTC coming testing here first before continuations. So without meeting this zone and you're having price turns, boom, having it at this particular low, but having price test this zone like this, that zone haven't been activated. That's why if selling at this zone is always risky. Unless if I'm selling to the next low, or when broken this low, I will sell down to this particular low that price created that causes impulsive move here. So that is where I will be selling down to. So this low being broken, then down to this particular low, you're having your TP1 and you're having your TP2 down back to this particular low, because here price caused a move taking out, getting back to this particular highs, and this is a high, this is a high, this is a low, this is a low, and this is the main zone that I draw from the daily time frame, which I'm still expecting price to get back to that particular highs. If price is not there, I'm not doing anything. I'll still pay attention and watch price as it reacts. So unless price break out this low, I'll watch the way it react before I will join into this particular low. Then if I didn't see any good confirmation to join into this low, I'll wait for it to drop back to this particular low. Then I'll wait for confirmation that we join it back to this high if it was not tested. If it's not tested, you know that price is coming up. So what price will have to do is to come back to this particular low before going up. So if it's being tested, you know that price is going to break this low. That's just the secret of it. You watch and notice, monitor what the price is doing. Test, you know that price is breaking out. Not tested, price come back to this low. You know that price is bouncing off here again, smashing out these highs. So that is just the simple of it. See price, we're trying to make a rejection. So here you make no decisions because price is actually, this is a buyer zone. This is a buyer zone. When broken, having price heading down and then heading down. It doesn't just go straight down. You can't find it going straight down. It always swings. So this is it on the 30 minutes BTC. We're having GBP USD. You can see GBP USD. Let's go down to the daily time frame to see what GBP is doing on the daily time frame. So on our daily time frame, we're having at this low, price is trying to make a rejections. You notice our trend low is always bouncing price. Price is always bouncing. Price came to this trend low, bounces, because this low is a low that caused an impulsive move to take out this key high. That's why price is always bouncing there. Price bounces and then price bounces again. Anytime this zone is being smashed, boom, straight down to this low. No hookup, because here the no sellers here to hold it. It will just go straight. The way this one take go straight, or if you just they go small like this, you see, and now if you just they go small like this, you can see it going small, trying to fool you. Oh, I want to go back. Boom. Oh, So if you are following the move like that, it will not look at where it's going to before it will test here and then return straight down. When broken, if you go at your next trend low, that caused an impossible move to take out a key high. So we're having these making rejections, and we're having these high on your daily time frame. We're having these highs on our daily time frame. We're having these highs on our daily time frame. I will drop down to my 4 hours time frame. I've drawn back to my 4 hours time frame. So price recently break out of this low on my 4 hours time frame. That's why you're seeing the buyers trying to buy at this particular zones. Price broke and trying to make a rejection, a retracement on your 4 hours time frame. So if price pulls up, we're having price pulling all the way to this particular highs on your 4 hours time frame. If the price pulls up, because I'm seeing this, I'll still mark out this as a trap for price here. I'll just set trap for this 4 hours time frame, and this is the lowest level here it gave us. Boom. So I will drop down to the 4 hours time frame. I'm sorry, the 1 hour time frame. On the 1 hour time frame, we're having this as our key zone. And we're having this low as our key zones. We're having this high as well. This is the highest level here. We're looking. This is a very massive trade. So for those that want to swing, you have to be patient. CBTC, GBP trying to push up, trying to give us a buyer's opportunity. So I'm still giving this a trap. I'm having this, I'm having that, and then that is the key zones. So I'm having that swing as well on the 4 hours time frame. So if you drop down to the 15 minutes time frame, your 30 minutes time frame, that will be a massive trade, trading to this particular highs, from here back to this particular highs, from here back to this particular highs until it goes down to your upside. If you're a day trader, then if you are a swing trader, you can then wait for price to give you do what you do, come back to this particular low, give you second retest, and you hold price down to this particular and down to the highs, because you see GBP trying to make a bullish move. So I'm seeing GBP trying to make a bullish move, but offsets. This is the low, this is the high here for price to make a pullback. And if you go down to the 15 minutes time frame, there is another high sit to make a pullback from. So that's why GBP is still going up, it's still trending up. This is low, and this is it. This is the high, this is the high. So price is still trending up on GBP USD. I've marked out my key zones down to the 15 minutes time frame, and we'll go down to Euro USD. We'll go down to the Euro USD. Let's go down to the daily time frame on Euro USD. So this is our daily time frame on Euro USD. Okay, I've analyzed. Okay, let me clear now. Euro USD. Then we're having it our key zones. So this is the recent high now. A price created. This is the recent one. So I'm not marking that one. That one I've already been taken out. And this is the recent low. That's why I told you guys last that Euro is breaking this low. Euro is still trending down now. Why can Euro be trending down and GBP? That means GBP will be rejecting at that particular zone. Where is it? At that particular zone. It depends on the time frame you are using. It depends on the time frame you are using. So GBP, yeah, I'm still having this as my key zones. So if GBP tap this will give you a retracement. My retracement all the way to this particular low and broken continuation. And we're having that GBP trying to make a rejections. Which one did I? Okay, this is zero. Let's go down to the daily time frame. Euro USD created this low on the daily time frame. Let me straighten it. So this is it, and on your daily time frame, this is the high that creates that low. That is why price was able. This is the high that took out this low. Notice price trace around this zone and then it sell down back to this particular zone. So we're having this low on Euro USD. This is the lowest level. This is our trend low, the lowest level that caused an impossible move all the way to this high. So that's why I'm still expecting price to have more drop here. But let's see as it plays out. And this is 4 hours time frame, Euro USD taking out this, giving us a continuation of the sellers and having out this high now retested. And anytime price take out a trend low, it will have to retest if it haven't come back to this particular zones, it needs to come back to make a retracement and before continuously going down. So let's see how Euro USD play out. So still having this high that haven't been tested because this is a high that cost an impossible move to take out this low. So if Euro USD returns like this, take out these recent small highs here, then we're having Euro USD trending down back to this particular high because it haven't been tested and it need to be tested. So before it will show you, let it show you direction that it's coming back to this particular high. It's a long trade, it's a massive trade. Then you need to be patient to follow it up. So if price should take out these highs, we're figuring out price coming back to this particular highs. But before it to come back, it need to retest on the new low it gave us twice. Like I told you guys, twice. Price always respect a key zones twice. He hit it twice before price going up. Like here now, price make a retracement, almost get to this high. It didn't test this, and price came back now, smashed it out, and tried to make a rejections. You have set a trap for price, marking out these highs. Okay, let me. Okay, so this is it. So this is the low that we're having on Euro USD 4 hours time frame. This is the high that we're having on Euro USD 4 hours time frame. We have marked out the key zones. So this is the main trend high on your 4 hours time frame. This is the main trend high. This is the main trend low. This trend low have been broken. And we're having out this zone as the zone that caused an impossible move to break it. So if price should break it on your 4 hours time frame, we're having out this. If price should come here, there's always a little selling opportunity. So if price didn't test here twice before coming all the way to this particular zones, and you know that price will have to reject here, come back here, and then before continuously going up. But if price come back here, come back again, test it twice before heading back to these particular zones, you know that price is breaking here, and then we figure out price going back to this particular highs. So that should be your target when you are buying. Then when you're selling, you're always looking at these as your key zones, these as your key zones, these as your key zones. This is the main high because this is the highest level. This is the low that caused this high. That's why price have to come back to this low, trying to make a rejections. So if price stop here, continuously breaking this low, then you continuously joining the sellers. There's a huge selling opportunity down back to this particular low. If price stopped here like this, and dropped back, taking out this, then you notice price is heading back to this particular zone. That's just it. And we have set a trap for it on the 4 hours time frame. We'll go down to the 1 hour time frame. If you go down to the 1 hour time frame, look closely, you see 1 hour time frame, you can see an impulsive move being created after that caused a break. That's why I marked it out. And we're having this low as the low now, price is rejecting. There's causing this impulsive move back to this particular high. So if price should break it, you're having swinging down. If you take your first TP here and you hold on, or first TP here, first TP. If you're not greedy, first TP, or you take your TP, or you take second TP here. If you're not greedy, then if you are greedy like me, then you target all the way to this particular height. So it depends on you. It depends on how you trade. So you wait for the right time to trade. Don't rush the market. Don't rush the trade. As it's going, you wait for it. You have marked out your key point on Euro USD 4 hours time frame. This is it. This is it. If you go down, drop down to your 30 minutes time frame, you can see it. This is it. This is it. If you go down to your 50 minutes time frame, you can see it. This is it. This is it. And your 50 minutes time frame is a massive trade. So if price eventually breaks, boom, back to this particular high, So you can see price trying to make rejections. So price break it, continuation of the sellers. Is it 1 hour time frame? Or this from 1 hour time frame? So 1 hour time frame, you can include this to it. You can include from here with a base down to this body. So 4 hours time frame, this 0 USD. I think I'm done with Forex, this GBP USD, and this BTC. CBTC, since it's trying to reject there, it's still trying to point up. Because still leave on your main interest is here. Your key zones where the sellers and the buyers are always buying and selling. This BTC and this US starting. Haven't resumed. And we're having this good having resumed. We're having our key high there. Let me remove this. We're having our key high there on gold on the swings. Having this as the new high swing that price is giving us. Having this as our trend high. Trend high is different from new high swings as our trend highs. And then this is a new swing. This is a trend high. This is a trend low. These are swings. And this is a trend main low. Trend low that got broken. Trend high. Cost and impulsive move. Then these are just ordinary markets swings. Your higher highs and your higher lows. So it's different from these and then these ones. So these are where the sellers are always in the market trying to push their millions in the market at your trend low. Where at your trend high is where the sellers are always in the market trying to put their millions. At your trend low is always where the buyers are in the market trying to put their millions. You see, price came back to this particular highs. What happened? Price sold massively, taking out your trend low, trying to make a retracement, and this is it. Price sold, created at these highs, trying to test it, and price sold again, sold down, smashing out the lows. That's why your TP should always be at low. It depends on on the kind of trader you are at the lows, and if you're buying at your trend highs, your key highs, your key highs, those are the only places that will save you. If you take it above your key highs, it depends on how you see the market. So I always take my TP, always take it at your structure levels, whatever structure price is giving you, even though a small structure like this, say price give you small structures and you want to scalp these small structures like this, as price make a retracement, you scalp the small structures, take it at your low. If price is taking, you scalp, take it at your low. Your main place you are holding trade, your trend lows, your trend highs. I'm having USD we're having at this particular low as the lowest level price created, and this high price try to test it. This low haven't been tested, which I see it pointing out. And then we're having this being broken straight down. We're having our USDJPY. I was supposed to USDJPY was supposed to sell. See it is sold down to this trend low. Most of us were holding USD JPY. You should take it structure levels to structure levels. You hold JPY straight down to that low, and this is the lowest level. Actually, cause what? An impulsive move to take out these highs. That's why at this zone it's sold down. Your TP, first TP, when this is broken, that is when you now sell down straight down to this particular low that created the impulsive move. You see it. That's why USDJPY was sold down to this particular low and returned back. You see it. It's sold down to this particular low and returned back, taking out this, giving us a structure shift. And then this is it. Return started going up, taking out this our new trend highs, telling us that the buyers are in the market actively buying, but we are not buying at the middle. We don't buy and sell at the middle. If you buy and sell at the middle at your own risk, we buy and sell at our key zones. Where are your key zones? Your main highest point price created before causing any impulsive move to break any lows or highs. So whenever price come there, that is why people are always putting in their money. So you as well, you put in, if you are watching from the higher time frame, once price tap at your key zones, you drop down to your lower time frame, look for your shift, you enter. Look for your candlestick patterns, you enter. Look for your confirmation patterns, you enter. If you're watching from your higher time frame, Then at your lower time frame, you know that your stop loss will be a bit tighter. Then this is your key high that price created. The lower time frame, I always execute at my key high. Depend on the move. If price come back to this particular highs and then make a rejections, come back again, pull back, you know that at the second test, price give you a bearish candlestick. That is a selling opportunity. If price come to your low here without testing this high, like now price have tested here, it have filled up this high small. So if it comes back taking it out, then we're having it straight down. But if price haven't tested this and you notice price come back, you notice price break a trend low, there's continuation of the sellers. It must come back here, return back again, and continuously going down. That's why you're always, your main interest is always at the highest point price created. At the highest point, the seller started that impulsive move. At the lowest point, the buyer started that impulsive move. So that is where you are safe to put in your money and you'll be safe. Then the problem now are where your stop loss. Some of us we tighten, even if you want to tighten your stop loss, it's even more safer tighten stop loss at your trend high. Because at your trend high, if you want to tighten your stop loss, it's safer tighten it at your trend high. You notice immediately price tapped here, it started selling. You can put your stop loss, put your stop loss a little bit above. If you want to, most of us put stop loss like this, put stop loss. So all these kind of stop loss, you always put it at your trend highs that price is creating, at your what trend low that price is creating, at your trend low that price is creating. That means you're entering immediately, price is tapping at that particular zones. You give it a little breathing space, and your next key zone should be at the next high that price created. This is it. The next high, because this is now broken. So if price eventually trend down to this, tap on it, boom, straight down, TP at this particular highs, depend on the kind of mind you have or you have in holding trade. So to be in a safer, instead of putting this and price might come, try to make, and sometimes price try to make a fake out and you see price faking you out. And then that's why you need to give your stop loss at times a breathing space. Why a price try to fake out and then continuously going? Why at times price always tap on it like this? That's why at times you need to enter aggressively. At times price just reject, it tap on it, boom, it just reverse immediately. And before it will go back to this, maybe it's a head price want to make. It have created a shoulder pattern. Let's say price created a shoulder pattern, came back, rejected, didn't tap on it, it rejected above, come back again. And this is it. Tap on it immediately, it rejected, and then finding itself all the way to this particular highs that caused an impossible move to take out this. You notice price rejecting, to not reject back to this particular low, it will not come back here again. And this is where, because this low now will now have an impact to price, to pushing up the price. So that's why some people enter aggressively. It will not leave weak and close with the body at this particular zones. So price come back again, like the way price left weak here and close body. Some close with a long wick. Let me see if I will show that any of the charts that I have that the two examples I'm telling you. Let me see if any of the charts. Okay, see this now. This one just tap on it. You see this one just tap on it immediately. Okay, example of what here even the talks are there with me. You notice price come here. It didn't even come back to this particular low to tap on it. It gave us small rejections. Price came back again. Immediately it tap on it. What happened? It gave us an engulfing candlestick and boom, it rejected. It didn't come back here for the second time. At times, it gives us a very long week. That's why some people always enter aggressively. When price tap here, boom, they'll just enter. Immediately price come to your, this is your trend low that caused these rejections. This low. You notice price come there, they'll just enter, immediately execute without, those ones are aggressive trader without confirmations. They'll just enter, execute, put stop loss, and then target to the new trend high. Your tip is always to the new trend high, the new high that caused that impulsive move where the seller started selling from. There's where you are going to buy to. And that's why price did this buying, even smashed above it. Same thing goes to the sellers. if you are selling at your trend highs down to this particular low. But if you are trading with the higher time frame, this is being done on your lower time frame. If you are trading with the higher time frame, like your 4 hours time frame, what you should look for is a shift in the lower time frame. If your entry should be on the 30 minutes time frame or your 15 minutes time frame. And we're having USD this 1 hour time frame. Okay, we're having price trying to make rejections there. We're having our trend rate. This is the high that got broken by this low. So that's why we're having here as our key zone. And we're having this as well. This is AUD USD. AUD USD gave us this high which haven't been tested and trying to make rejections which gave us gap here which haven't been filled. And we're having a key zone here, we're having a key low. So on the 4 hours time frame, let me refresh. On the 1 hour time frame, I can equally mark out this if I'm selling against if I'm dropping the market, I can equally mark out this that if price should take out this, then my TP will be around this particular zones. I can equally mark out that. And we're having this GBP JPY price so that GBP JPY trying to make a rejection. So this might be a minor selling on GBP JPY because heavy selling this is one I capture. So heavy selling down to this particular low. I'm seeing it to be at this impulsive high. Have this high been tested twice? No. That's what we define. But I say you could there around this particular high. But on patient go carriers gets that exact zones. So if price test here first, you know that price is smashing out this continuation of. But if price didn't do that and you notice price retrace back test here and we're having the sellers continuously selling down. So thank God I've marked here as well. I've marked here as well as my new trend high. So and this is the main trend high. This is an upswing. And we have okay, yeah. This USD card. Did I analyze USD card? I think I didn't. I didn't mention USD card here. It was hidden. Okay, this USD card. We're having USD card daily time frame. The highest point. We're having point. The lowest point. We're having in the lowest points, and we're having here the zone that caused the impulsive move. That's why price is trying to make a rejections. We're having here the zone that caused an impulsive move on your daily time frame, and we're having here as the new high price created on your daily time frame. Let me refresh the chart now. Let's see the overall view. This low haven't been tested. This is the low. Why I marked it? It caused an impulsive move, taking out of these highs. Continuation of an uptrend. So price is selling down to this particular low to test it. So we're having at these highs, but before it to test it, you need to get all the way to somewhere. So we're having at these highs after our new trend highs. We're having at these highs being smashed out, and price trying to make a rejections. So we're having this now as the low. We're having this new low on daily time frame. We'll go down to the 4 hours time frame. This is our 4 hours time frame, or it's long. Our 4 hours time frame, this is the zone that caused this impulsive move. And we're having at this as the lowest level that started it. And we're having price created this as our new trend low. We're following the new swing of the market. So this now is our new trend low, and that caused this impulsive move all the way. This high is the high that actually caused an impulsive move. That is why price came back to this particular high, trying to make a rejections, and then we're having it rejecting all the way on your 4 hours time frame. So I think those are the key zones, and this is a key low as well. So this is a key low as well. On your 4 hours time frame, USD card, we're having USD card 1 hour time frame. You can drop down to 1 hour time frame. You notice immediately price stopped here, it started making a pullback, pulling back. I'm having it pulling back all the way to this particular low. So I'm still having USD card pulling down all the way to this particular low. When broken, pulling down to this particular zone. Structure being broken here. So structure being broken. We're having USD card trying to make a return here, trying to make a return back to this particular zone. We're having 30 minutes time frame. So you notice 30 minutes time frame, that low was the low that caused an impulsive move to take out this high. So that is why this is our new trend low. Price is trending down to this USD card, expecting it down back to this particular low. So there's my expectation for USD card. It's coming back to this zone. There's an expectation on USD card. Do we have the volatility? Let's see. Let me connect. Let's analyze some volatility in this. Let's connect to volatility. I'm coming. So I'm coming. I thought this thing was open the. Let me bring up the tariff. Thought I opened it here. I'm coming now. I'm trying to use another browser so that it will. Let me open this one. This one is not showing me. Ah, did I remove it? Okay, I've seen it. My mommy. Okay, let me share it. Uh, all right, can we see it? So this is volatility 25. This is volatility 25 in this 24 hours time frame. So this for volatility, we are done with Forex. So if you're a volatility trader, I will analyze. So this is 25 in this 20, sorry, this is 25 in this 24 hours time frame. And price currently take out these highs. Our having price currently produce this low. So now the structures will be more easier for us if we can be able to get the structures of the market. Price came back here, give us an equal highs, and price came back here, smash out this particular low, telling us our price is going down. And this is the zone it gave us. This is the high it gave us. Why going down? So producing this low now on your daily time frame, price produced this low, smashed out by this particular zone. This is a break of structures, price breaking to the downside, and we're having 4 hours time frame. This is our 4 hours time frame on volatility 25 index 4 hours time frame. Let me refresh the chart. You notice price gave us this, and this is the low here. The price gave us. What created this low was this move. What created the low was this move on your 4 hours time frame. So that's our point of interest here, and we're dropping down to 1 hour time frame. There's our 1 hour time frame. 1 hour time frame actually gave us an equal low here. You notice it gave us a break shift in price, and it came back to this particular zones. This is the first TP, and this second TP, your main high that caused this move to take out these lows. That's why price returned back to this particular zones and started going. So price went all, you can see 1 hour time frame showing that we can still mark out these highs that got broken. So 1 hour time frame gave us this being broken, gave us this, so that we can trade. If you want to trade with 15 minutes time frame, you notice it might be very far from distance from here. Distance from here. Yeah, it's massive from here. Distance from this zone to here is massive on the 15 minutes time frame. So you notice on the 15 minutes time frame, okay, let's go down, let's go back to 1 hour time frame. So 1 hour time frame, we're having price took out this low, and price retested on it by this move on the 1 hour time frame. So giving us this our structural highs, price trying to make a rejections, came back, tried to make an equal high here. So this still giving us a bullish move all the way to this particular highs, because structure being broken, structures of the highs being broken, telling us that price is coming back to this main high here. And before it will get back to that main high, it needs to drop somewhere. And this is a low that caused, this is a low that caused an impulsive move as well. So, and this is a low as well that price trying to make a rejections on. So having here, I can mark out this as a key zone, but this 1 hour time frame, I didn't consider this. So I'll have my active zone here and here. So this zone has been broken already. So I have my active zones here and here. I won't be marking all this. All these are just normal swings. And on the 4 hours time frame, let's go down to which volatility pairs do you guys trade again? Let me analyze it. Let me go down to volatility 75. I trade 75 as well. It's very sweet to analyze. And we'll go down to 24 hours time frame. See, it's trending down, giving us a trend. Price whether they trend like this. What channel? I hope you want to go. Trend, and the up way they go, if you go reach towards this high or this high. Trend low daily time frame. Trend low daily time frame. So we're now having this as a trend low, trend high daily time frame. Trend high daily time frame. Trend high daily time frame. So now daily time frame is giving us a swing. Whenever any of this is being broken, I'm saying price, say if you reach all the way to this main trend high that caused this or this move. So or it probably come back to this particular zones. Because if price is trending low like that, you can see the momentum of the sellers are reducing. I'm trying to zoom up to see if there is a low, but the reef will not give me that. If not, it's giving me that this is a key low that was broken. If not, if price is trending low like this, if there's a key zone there, I have to pull up. Put the price all the way to this particular zone, but we'll have to follow the trend as it goes. There is 24 hours time frame. We'll go back to the 4 hours time frame. And these are 4 hours time frame price testing this low. And this is a high. That caused this impulsive move taking out this low, telling us that price is selling. And then price has sold down all the way to this zone. Price is still selling if price this is now on the 1 hour time frame we're having this high because price push all the way to this particular high. Will I mark that high or this? I'll just use this high instead. So I'll just mark it like this on a 4 hours time frame. So this is it. Why isn't this high? Because this price is finding so difficult. That's why sometimes I use arrow markets down to this particular zone. That price is finding so difficult. Or even though if I draw it like this to be too big on the lower time frame. So draw it to this body of the price. Let me draw it. Okay. To the body of the price. So when broken, this place is already showing. Yeah, haven't been tested, it's already showing. So when it's been tested, continuation. So and 4 hours time frame. Sorry, 1 hour time frame. These are 1 hour time frame. Price tested it and then pushing up. You see the swinging all the way to these highs. This is the high we marked on the daily time frame. This is the high we marked on the daily time frame. So this is a zone that caused this low being broken. So on the 4 hours time, on the 1 hour time frame, we're having this as a structure. This high caused this low. That high caused this low to break, and it was not respected. It was not tested. This high, let me remove this. This high created this low, pushed off, couldn't get here, and then this high caused this impulsive move, taking out this low, giving us this as our new structural low, which got retested at these particular zones, trying to make a pullback to this high that created this low. That's why it brought back to this particular highs that created this low. Immediately it tap on it. Okay, see the reef. Immediately it tap on the high. What happened? It started selling. And I've noticed this on the 1 hour time frame. 1 hour time frame always tap and start selling. 1 hour time frame always tap and start selling. See it, tap on it, start selling. Come back again, start selling immediately. So here now, if you're looking for confirmation, you would have missed this. This one gave us engulfing candlestick. Would have entered it here instead of around this particular zones. You now enter it here, your stop loss will be above this. So this is a high. This is a high. That is why price always tests it and rejections always happen. And this is a high, a trend high. I always call it a trend high, not all these swing highs. So when I'm talking a high, not all these highs, not all these highs, not a low. I mean a trend lows and a trend highs. This is a trend low. So where the buyers are always buying and where the sellers are always selling. So buying all the way to the particular zone. So here prices at the middle on your 1 hour time frame. What you have to do is to be patient. Wait for you to count your trend highs or your trend low you execute. If you count your trend low, then this is where you look for a buying opportunity. You went broken, continuation of the sellers like this now. Broken price is these highs that cause this impulsive move to break out this low. So whenever price break a low, it always goes back to that highs or that low that caused that impulsive move to take out that low. So I'm having that, and then here is our key low on the 75 index. So you have to be patient. 75 index there for middle. Unless, yeah, I won't say unless, I will just say this is my key zones and this is my key zones. And let's drop down to 70. Let's go down to 50. Okay, let's analyze 10 index. Let's see. We'll go down to 24 hours time frame. Go down to 4 hours time frame. So 24 hours time frame giving us a trend high that was broken, causing price to give us a shift to the upside. A trend low that caused that broken, that caused market to break the highs. I don't mark this on daily time frame. It's not giving me a recent highs here. On daily time frame, it's giving me these lows at the recent lows that caused this. So if price should break this and we're having price trending down back to this particular low on your 24 hours time frame, and we're having 4 hours time frame, these are 4 hours time frame. I'll have to straighten my line because this is my key points. And this is when I marked out on my daily time frame. This is when I marked out on my daily time frame. So that high is 4 hours time frame, and having all these. So when broken, we're having 4 hours time frame, 1 hour time frame, 1 hour time frame. I haven't tested here twice, and it's giving us a shift. So we're having that as well on the 4 hours time frame. This 70, this 10 index 1 hour time frame. So we're expecting price to come back to this particular low. You can see it's trending. You have to pay attention, leave it to come back to this particular low. If you give it rejections, you buy to this particular highs, or you buy back to this particular highs that cause this impulsive move. You should be following the trend. If you are following the trend, if you notice this low and this the high that causes impulsive move, price push, creating this low, pushing all the way to this high. If you see price trending, if you come back here, if you're buying back to this particular highs that cause this impulsive move. Unless you want to risk it more, then you can go back to these main key zones where the buyers sellers are always in the market to drop price. But your main TP zone should be at at this particular zones. Then you watch price, the way price reacts. If you trend back to these particular zones, then you wait for a selling opportunity. You sell. Then your TP is already giving down. TP is already giving. TPs are already given because your main structures, your main trend highs are your TPs. Your main trend low are your TPs are your entries. So if you go down to 70, let's go to 50 index. This 51 is index. If you go down to 51 is index and we'll go down to the 24 hours time frame, let's see what the 24 hours time frame have for us. If we refresh the 24 hours time frame, see 24 hours time frame clearly giving us a downtrend move. Is this really a downtrend move? Because now price is at our trend what low, trying to make a rejection. So you can see what is happening there. Price is at our trend low, at our key zone, trying to pull up. So what will you do at these particular zones? Now we're having trend low, we're having at these highs as the high price, the highest level price got to that caused this move. So what you have to do now, you can't take all that on the daily time frame. You mark out this as the new high price created. So you drop down to 4 hours time frame, and the 4 hours time frame, you marked out this. You mark out this, you refresh the charts, you go down to the you mark out this lowest level now that price created. Now this one, you not drag it all the way. You put it here, that broke it, and then this now is now a new low. This is now a new low. Price tap on it, give you confirmations, TP. Price trend, give you confirmations, TP. That's it. So this is 4 hours time frame. 4 hours time frames give you the higher time frames always give you the structures of the market more clearer. So this is it on the 1 hour time frame, and this is the low on the 1 hour time frame. We're having this as low on the 1 hour time frame, and we're having this as high on the 1 hour time frame, but not marking too much. So this is a key zones that created this low. Price maker rejections. This is a high that smash out this low. So if price is pulling down, it will pull down to this low, make rejections, find itself to this highs, find itself to this main zone. This is the main key high that provide. And we're having the next zone here, uh, which is 50 index. We're having 50 index. Let's see what 50 index are for us, 24 hours time frame. So let me refresh the chart. 50 index, 24 hours time frame, currently giving us downtrend move. And that trend move gave us this high. Okay, price gave us this low. That haven't been tested. Give us this high that haven't been tested. So price is trying to push, having it coming here. Having our POI. POI 1 haven't been tested, POI 2 haven't been tested. So we watch closely. Where it's being tested here is if you mark the body to the week, you see it's tested once. It test, just test it, just tap on it, immediately it returns. See, these ones are just tapping, immediately returns. There's the higher time frame. The higher time frame always give you a tap and immediately returns. That's why if you, unless you want to be entering aggressively, unless but if you want to enter it with confirmations, if you're on a higher time frame, that's when you drop to the lower time frame, look for shifts, and you join the price. That's when you can get it more on this. Your stop loss will be more tighter. So you notice price pushed from here. We're having this high that have not been tested. So we're still having it, our POI there. I still have on my eye still on that high that price created. And we're having this 4 hours time frame. And the 4 hours time frame gave us that highs, you notice it. And this is the high that got rejected. This is our new trend high that got broken. And this is our new zone that caused that move. This is the zone that caused that move. And this is the low price is trying to react on your 4 hours time frame. Because this is the low that caused this move to get all the way to this high that is finding so difficult to break. So the move that caused or that caused price to get to this high that I find it so difficult to break is what this low. That's why price tapped on it and the buyers are heavily in the market to buy. See it's 4 hours time frame. And this is 1 hour time frame. You notice what the price is doing. So we're having our key zones, this and at this particular height. So unless you want to be marking all the small ones and catching small moves, but the main moves are the lows, the trend lows, the trend lows, the trend lows. Those are the main moves that price is making. So I think I'll be ending it here on the volatility 50 index. So those of us that are trading this space, you can input, you can watch it, rewatch the video, put the analysis in your chart, and wait for price as it plays out. Come to your key zones. You notice at your trend highs on your higher time frame, like your 1 hour time frame, 4 hours time frame, one day, price always tap and reject. If you are looking for entry at these particular zones, let's say entry price always tap and reject. Price always tap at your key highs and reject. Price always tap and reject. So you always tap and reject. Put your stop loss very safe. So I think this is the end of the live stream for the volatility and the forest analysis. Also include Bitcoin, which is crypto as well. So if you have any question, you can ask before I call it a day. All right, I think this is it. This is the end of the live. Uh, there's